MicroStrategy, symbol MSTR on the NASDAQ. It's a Bitcoin treasury company. The company previously was a software business intelligence analytics company, but now the vast majority of the assets and really their whole spiel is all about Bitcoin now. So we're just going to focus on that. The stock is trading at $384 a share with a market cap that includes both the A and B class shares of $90 billion, and that's off their current share count as of December 1st. That share count has been changing a lot, and that's why I'm saying specifically December 1st. It is up a whopping 461% year to date, however, vastly outweighing Bitcoin's performance so far this year. So, what is MicroStrategy's Bitcoin treasury strategy? MicroStrategy's goal is to accumulate as many Bitcoins as possible on a per-share basis. The legacy software division was effectively break-even last quarter prior to corporate expenses. So really, how can they actually add Bitcoin on a per-share basis without profitable operations or positive cash flow from operations? You need outside funding. The company plans to raise $42 billion split between shares and convertible debt by 2027, but it's just well ahead of that pace at this time, as since the end of October, they've raised $13.5 billion between equity and debt, or convertible debt, that is. They are issuing debt, which is now, it's low or effectively 0% coupon rate convertible debt, which is an important factor, and we'll get into that in a minute. As well, they are selling shares at a premium to the net asset value, or NAV. So for a fund or an ETF, the NAV is normally equal to the market price of the unit, give or take a few pennies. Normally it's the bid-ask spread. But if you look at any fund or ETF that has open exchanging, you'll see the discount is a fraction of a percent and is effectively just the bid-ask spread. But this is not the case for MicroStrategy. It's a company. It's not a fund. The equity value premium to the Bitcoin NAV, ignoring the other assets, which it does have some, it has buildings, it's not significant. But I will just comment on that, is roughly 2.85 times, or a 185% premium to the NAV. So when they issue shares, they're able to creatively add on a per share Bitcoin basis, because on a per dollar basis, a shareholder holds about 43 cents of Bitcoin, and removing the debt, that comes out to about 35 cents NAV. So when they issue $1 per share and buy Bitcoin, that 35 cents of NAV per share increases and ticks up and trends towards dollars. This has the limit of needing the stock to be trading at a premium to the NAV and the underlying Bitcoin value. Michael Saylor, the very, very vocal CEO, stated in an interview, they are selling dollar bills for $3 because of that premium. That is what they are doing. I will add, they do refer to this accretion of Bitcoin per share as Bitcoin yield, which is, in my opinion, is marketing at best, misleading at worst. The Bitcoin itself isn't creating a yield like a bond. It's just raising capital. The asset being Bitcoin is just not generating return. I think yield is misleading. Call it something else, but that's what they're doing. The only way this does work is when the stock is trading a premium to the NAV. So now on to the convertible debt. Convertible debt is effectively a bond plus a call package together. The call is a very important part of MicroStrategy, as the company benefits from the volatility of the stock. As volatility goes higher, the call price moves higher. So from MicroStrategy's point of view, they are selling volatility. So if volatility is higher, they get a bigger price back, effectively. They're selling for a higher value. The benefit of the convertible bond is that this allows MicroStrategy to have a lower coupon rate, or zero coupon rate, depending on the bond that they issued. Most of them are now, they've trended towards zero coupon debt, only needing to pay back the face value at maturity if the stock is not converted. But call options do have value. So although there is really no coupon or very little coupon payment depending on the bond, there is still an implied interest rate. The sum of the present value of those interest payments is equal to the call value, which is why you have things issued at 0% interest rate. It all balances out and structured that way on purpose. The purchasers of these convertible bonds, which many people have stated, they just must want these shares so bad that they're willing to pay this premium. They don't want the shares. They just want to do some sort of gamma trading, which benefits from volatility. If the volatility, they want it to be as high as possible for as long as possible. The more movement and the longer the movement lasts, the more money they can make by doing these trading strategies. They do not care if the stock rises or drops in the long term. They just want it to move, and the more moves, the better. They're trading. They are not looking to hold the shares. As it is debt, it does result in leverage, which is roughly 1.2 times right now. This will shift higher if the value of Bitcoin falls or additional debt is added, or it will be eliminated if the bonds are eventually converted into shares at maturity, if that's what they end up resulting in doing. However, that 1.2 times is in respect to the NAV. So if we break down leverage to this simple idea of just having greater economic exposure to the capital compared to what you put in. So like with margin trading, you take a loan, you get access to more asset than you put in, but you have that loan. Similarly, with options, you can gain more economic exposure. That's what leverage really is you're gaining more economic exposure to whatever asset than what you actually have of capital. If you are buying MicroStrategy stock, you need to pay a premium to the NAV, roughly 185% right now. You do not have economic leverage in excess of the capital you put into the share value at this time. The company may be levered on the balance sheet. They are at 1.2 times, or whatever it happens to be when you're listening to this. Changed it a lot. But the economic exposure is only 0.43 times. As I mentioned before, on a per dollar basis, you are not really levered overall at these prices through MicroStrategy shares. In fact, you're really underexposed to Bitcoin as you have such a large premium at this time. The company's performance has really been detached from Bitcoin returns. Even with this levered balance sheet, it's not really correlated at this time. So you're not even gaining proper exposure to Bitcoin if that is your goal. And that's what normally people will state, and that's what MicroStrategy states is their goal. And their selling proposition is to gain exposure to Bitcoin. But that's not a great factor right now when the majority of it isn't actually valued off of Bitcoin holdings at this time. So concluding, traders will love the stock due to volatility. If you want to trade it, realize how volatile it is and that Bitcoin does not drive its underlying value at this time. If you want to gamble, like Brennan has, which I'm sure he'll mention after this, just be aware of the risks. You are overpaying for MicroStrategy shares. Just consider what Michael Saylor, the CEO of the company, said himself in another perspective is you are holding that $1 at the cost of $3 right now. The inverse of what he's doing. Remember, they are selling the shares. They are not buying their own shares back. They're actively selling their shares into the market. To add Bitcoin is this same reason you are overpaying. It's the exact same reason, just the other side of the coin. To get the same return as Bitcoin, you need the premium to hold or long enough to where they can sell shares off to other shareholders and slowly have that Bitcoin yield move up the actual underlying holdings. But that's not something I would personally count on. The core reason why the stock has risen to the degree it has over the years, that the premium has expanded, it can disappear just as easily as it comes. If Bitcoin does pull back like it has many, many times before for 50, 60, 70, 80%, expect an even sharper correction in MicroStrategy as the premium would likely contract and or vanish. Simply put, if you want to spend $3 on Bitcoin exposure, actually get $3 in Bitcoin exposure, just buy an ETF. If you want to do the stock market, buy Bitcoin directly if you're comfortable with that. I would want to get my money's worth personally. And of course, Brennan has a short position on the stock.
Yeah. So, and that's the thing. Like, again, like, so I've essentially got a bearish, I'm going bearish on MicroStrategy by going long the TRX or T-Rex 2 times leverage inverse MicroStrategy daily
and
ETF.
we are not recommending clients.
No, of course, and like, no, of course we are not. But like, and again,
I
like,
didn't know you were a short seller.
Well, I'm not even short selling. I'm going long an inverse ETF. So like, it's not even technically shorting, but like
you're buying short positions.
Yeah, like one thing. And I guess like the thing is it's just with like, like my portfolio, it's like this position is 0.25% of my overall portportfolio. So it's like,
just told people how large your portfolio
well,
is
I
now.
didn't say because I didn't tell how much I put into it. But yeah, so just keep that in mind. And like me and Brett we're talking about as well is like people need to understand like there's additional risks with levered ETFs that like a lot of people don't understand, such as like the volatility decay with levered ETFs, as you tend to lose value in volatile markets, especially if you're like planning on holding it for a longer period of time. Like there's this long-term performance drag. So, technically you're, the return might not be as good as you anticipate, or it will be worse off if, it goes the opposite way as well. So these are just things to keep in mind. But again, I'm gambling with a very, very small piece of my portfolio, and we'll see how much money I lose. It'll be fun
And
to see.
we've gave him a hard time about this off the call.
We're more just kidding around internally. It's
No, of
it's
course.
just, yeah, it's just he's
But also, like I've said before, if you want to gamble with a little bit of your money, there's not a problem with that as long as you know what you're doing and it's
Exactly.
a relatively small percentage of your portfolio.
yeah,
Exactly.
but just know there's investment basis speculation.
It's not an
or
investment.
gambling.
Yeah.
This
Yeah,
is not
exactly.
I
that.
can go to Vegas. I can
Yeah.
throw money on the blackjack and
That's-
make a ton, but that's not investing, right?
No.
And I
Might
was
be
in
more fun.
Vegas a month ago throwing money on the blackjack table, and I lost it all
Yeah.
gambling. So
Surprising.
same thing.
Yeah.